All right, welcome to the Expect Success podcast. We highlight real estate as an investment and speak with professionals that make it happen every day. Today, I'm joined by Cory Harelson, and he helps investors in a very specific way and an asset class that doesn't always get the most attention in the limelight. So I'd like to turn it over to Cory now and have him introduce himself.
Yeah, super excited to be here, Eric. My name's Cory. I'm with Freedom Investing Group, and we invest in mobile home parks. So it's kind of like the little cousin to multifamily. And it's specifically geared towards providing affordable housing to people that really need it. So yeah, excited to talk. I love this topic.
Okay, awesome. Then I want to jump right into it because, again, you said it's a cousin to it. So it's not one that's always in the spotlight, is talked about in the community, but not so on a broader scale. So I just want to shed a little light on there. So your background, let's start with your background a little bit. You started as a structural engineer, and then you made the transition to mobile home park investing. How was that transition, and what caused it?
Yeah, so about 10 years ago in 2015, I was working 60 to 80 hour weeks as a structural engineer. My first kid was 2. I felt like I was missing seeing him grow up. I would leave for work in the morning and he's asleep. I come home and he's already in bed. I wasn't see it was kind of killing me. And there was one particular week where it was a whole week straight where I literally didn't see him awake, and it was driving me nuts. I was working on some big deadline. I felt like I had no control over my life. Sunday afternoon, maybe 4 or 5 o'clock, I was like, screw this. I'm going to go home and put my kid to bed at least. Right. And so I left the office. I got home and I went to take my kid from my wife to go give him his bath and put him to bed and stuff. And he looked at me like he didn't even know me, freaked out, stranger danger, clawing, crying, trying to get back to mom. And I felt like I had become a stranger to my son. And so it broke my heart. And I didn't know what I was going to do, but that was when I was like, I've got to do something different. And so I started looking around. I did what a lot of people did, and I picked up that little purple book, Rich Dad, Poor Dad, which kind of blew my mind. I don't know. I was 35, I think 34, 35 at the time. And I don't know why I had to wait that long to figure out like, oh, assets that pay you. I wish I had learned that sooner. But so after that, I decided I was like, okay, I'm going to invest in real estate. So, the first thing you have to do is really pick your asset class or your niche, which, I did a bunch of research. I read Bigger Pockets and a bunch of stuff. And my wife and I decided we were going to invest in duplex, threeplex, fourplex, small multifamily. And I started looking around in Boise near where I live. And I'm a nerd, right? I'm an engineer. So I built a pro forma. I figured out how to build a pro forma spreadsheet. So I started analyzing a bunch of deals, and I was quickly getting discouraged with what I was finding. Even back then, the price to rent ratios, at least where I'm at in Boise, I definitely could have found deals if I would have dug more, I know in hindsight, but I was having a hard time finding anything that penciled. And I stumbled across a mobile home park for sale on Craigslist of all places. A little 9-unit, really small park. But I put that in my spreadsheet and the numbers looked much better. And I kind of started to dive down that rabbit hole. So we bought, I was like, this is awesome. I dove in, I learned everything I could. We bought our first park in 2016. It was a 12-unit park, a 10-minute bike ride from my house. And over 5 years, we had some good timing on it as well, but we managed to fill the vacancies and raise the revenue and managed to we've 9x our money over a 5-year span. And I've kind of been hooked ever since. So that's how I got into it.
Okay. Well, let's take a little bit of a step back, because I know you mentioned you were looking originally at, duplexes, threeplexes, and quads. So what was it about RV parks that really made it attractive to you as a way to put your money to invest in?
Yeah. So when I first got into it, I mean, there's a few things. So when I first got into it, I came into it from trying to get my family's financial freedom, right? And so
Of course.
the cash flows were just better. So if people know about cap rates, like effectively it was just trading at a higher cap rate, which is like a price to rent ratio, basically. So they cash flowed better, really. And I've kind of pivoted that now, having been in it for almost 10 years. There's really two things. One is having experienced a lot of met so many folks that just need an affordable place to live and just have no other options. It's the most affordable form of housing out there. So apartments, there are affordable apartments, but the only way they really work, they're not really truly affordable. They're affordable because the government steps in with Section 8 or LIHTC or some other way to kind of help make them affordable for people. These are actually truly affordable, like people on minimum wage salary can afford to live in these communities and have a decent home and a yard and no neighbors banging on your wall. So it's really, really good from that perspective. And then the other perspective, I originally got into it because back in the teens, the secret wasn't out on them yet. And so the price to rent ratios, like I said, the cap rates were more favorable for cash flow. That's actually compressed a little bit. They still trade at a higher cap rate typically than apartments, but the big thing now, I think, is the value add potential in mobile home parks. There's so many of them out there that are owned by the original mom and pops that built them. They were almost all built in the 50s, 60s, and 70s. And it's either first generation or second generation owners that are getting older. They're kind of ready to sell, and they haven't really done a very good job in the last couple decades of taking care of them. There's empty lots in communities with an affordable housing crisis, the most affordable form of housing. There's just empty lots sitting there because it takes capital and work to bring in homes to sell to fill the lots. There's deferred maintenance. The roads are crumbling. The trees are overgrown. And so there's a real opportunity to go find these things and bring in the capital to improve them, make them nice, and provide additional housing for people that need it by filling in those lots. And at the same time, boosting that revenue way up so that you can build wealth for all of the investors who come into it as well.
Awesome. We're like 6 minutes into it, and that was packed with so much information. And I say that because one of the reasons why I wanted to talk to you is because your story really resonated with me. I got into real estate investing sporadically, throughout the last 10, 15 years, single family homes on and off. And it was creating more of a time hole and money hole and headache hole with tenants than anything. And I wanted more time freedom and also generational wealth. So when I heard you hear your story about your son not recognize you, that really resonated with me because I always said, I'm not going to trade my time for more dollars. I want to have more time, even if I have less dollars. And to stumble into real estate investing the way you have, you said 9x your money and also still have your heart be in the right place with your family as well as affordable housing. That's what I wanted to ask you about too. Your mission to address the affordable housing crisis, it definitely is inspiring. So how do you balance that profitability with the accessibility for the affordable homes? Like you pretty much explained it, but I want to hear you go a little deeper if that's okay.
Yeah, absolutely. And that's a great point. So the product that we are providing is affordable housing. And so we have to keep it affordable. So that's kind of at the forefront of everything we do. So we start with trying to find communities where they actually have an affordable housing problem. So if there's areas of the country where you can still get a house for $100,000, if we're providing a mobile home for $60,000 sale price, that's not that much better. But if we're in an area where houses cost $275,000 and we're providing that $60,000 mobile home, that's attainable home ownership for somebody so that they can actually afford to do that. So it starts with, I guess, picking the right location where there's actually a need where there's actually is an affordable housing problem. And then from there, what we try to do, we definitely we'll want to get the rents up to where they could be, but we're not trying to shoot the rents up overnight. So we kind of moderate, we sort of put a little cap on what we're willing to do as far as the rent raises. And then the real big value add is really filling in those lots and providing more housing. It's almost like if you had an apartment building and you could add a whole nother floor to it because there's all these empty lots. So I think that's really the big key thing. And so for context, in some of the communities, we've got some parks outside of Lexington, Kentucky. And so the median 2-bedroom rent there is around $1,300 for a 2-bedroom apartment. And our lot rents, we're in the fives for our lot rent. So it's so much cheaper. It's so much less expensive than the apartments that it's just not even close. Even if someone has to come in and we're mostly bringing in, we bring a combination of new and used homes. So we have different kind of products at different price points. We've got homes we can sell for $20,000, $30,000, depending on the home itself. Or sometimes we'll bring in newer homes that's brand new, never been lived in for $60,000 or $70,000. I think just the product itself is so much more affordable than anything else out there. That's just the niche that it's filling, I guess, is providing that attainable homeownership. So.
Okay. And you mentioned, you gave the example about a $100,000 home versus a $60,000 mobile home. And then you went from that to like a 240, which is more closer to average national median. And you still set a mobile home for 60. Are you finding that price disparity?
Yes, because for us, for when we're selling a mobile home, we bring it in. We don't even really need to make a profit. I mean, maybe we might try to make a little bit of profit, but even if we break even on the home sale, for us, our investment returns are coming a lot from that lot rent and the fact that we have that revenue in there and you apply a cap rate to it. That's where we really make our returns, is by having that resident in there. So we don't need to make a big profit on the sale. So we will bring it. So typically if we're bringing in used homes, They might be around by time depending on what we need to do to renovate, we might have to have someone come in and renovate them so they're nice. We're not trying to sell just total junkers. So they might be in that $40,000 price range for a home, depending on what we need to do to get it in there. And then the brand new homes off the factory line cost in the 50s. And then by the time it maybe cost $10,000 to bring it in and set it up and hook it up with utilities and put steps and a porch and all the stuff. So by the time you're done, you're usually in between that kind of $60,000 and $70,000 price range, but that's the same pretty much no matter where you are. So, the price for us to bring in a new home, we're buying the home from a factory. They're pre-manufactured, right? And they're shipped. That's why they're called mobile. They're really not that mobile, but they're mobile because they're built somewhere else in a factory, which is why they're so affordable, because they're in a factory environment and they can ship them in and set them up. So it costs us the exact same thing to put them in no matter where we are. So that's why it's like, if we can find places where the rest of the housing is higher, then we can really, really provide a good value. Versus there's some places, like I know a lot of like Southern Illinois and some areas where the housing is just not expensive there. So there's some areas that we kind of avoid a little bit, just not because I think it's bad areas necessarily, but just they don't seem to have as much of an affordable housing problem for us to solve.
No, that's a great answer. That actually answered the question thoroughly and very well. I wanted to ask you too about specifically RV parks, because I just recently spoke to someone who does RV parks as opposed to mobile home parks. And his counterpoints were not really dealing with tenants, they're guests. He can focus more on the land and the value add with other amenities. How do you look at, I know you said there are a lot of value add opportunities. How do you look at that asset class as opposed to RV parks?
Yeah, great question. So that pops up a lot. So they're related, but they're different. So I kind of think about RV parks. And so what we do mostly, we are invested in one RV park currently, but we are mostly mobile homes. So these are homes that they probably will not move once they're installed. They can be moved, but it costs these days $10,000 to $15,000 to move one. Yeah, so it's just a little bit of a pain to move them. So they don't move very often. Whereas an RV park is something you can hook up to the back of your truck and just drive. An RV, you can drive wherever you want. So those move all the time. That's what they're built for. So there's two kinds of RV parks. One is more like the vacation RV park, where you might go for a weekend or a week with your family. Maybe it's somewhere cool up in the mountains where you can go camping and hiking. Maybe they've got a lazy river and swimming pools and a store and a restaurant. So it's more of like a vacation type experience. And then there's another kind of RV park where people pay monthly, and it's more of addressing affordable housing, just like a mobile home park does. It's just that people bring RVs. And so that's more of a long-term RV park. So you've got kind of a monthly scenario. So for us, we would look at the latter because it operates similar to a mobile home park. Your tenants, I think, probably turn over a little more frequently in them. So there's a little bit of a nuance as far as how you analyze it. But for the most part, it operates just like a mobile home park. Whereas that first one, the really, really nice ones, those seem great. I know people who do those. I think they're very high cash flow. From a management perspective, I think that's probably more like running a hotel versus a housing community. You've got people checking in and out all the time, just a lot more management intensive. So for us, that's just not it's kind of just getting a little too far out of our wheelhouse on those. So we have not done any of the resort style ones, even though they're really cool. And I would love to learn how to do it. But I sometimes suffer from shiny object syndrome. And my partner, Thomas, is really good at reeling me back in and keeping us focused on what we're good at. So
yeah, that was a good answer, because that's what I wanted to hear, your insight, and the reason why we all pick our investment vehicle based on our risk, our management style, what we'd like to manage, what we don't. And his alternative reasonings were he didn't want to have actual tenants, so they could be guests and come and go and not have to worry about maintenance. But sounds like the way you run the business is a mix of both. So you have some that are renters as well as they own the home and you manage the property itself. Is that might I look at that correctly?
Yeah. So the goal is always to get us to the point where we have tenant owned homes. And that's really the unique thing for mobile home parks is versus apartments or build to rent or any of the others is in a mobile home park, we would aim for the tenant to own the home and we own the land. So they're paying to rent the land, but they own the home. So their rent is really, really low because they're just renting the land. And for them, if for us, like if the toilet leaks, it's not our toilet, it's their toilet, right? So it's lower maintenance, and it kind of makes sense because like if there's like weather stripping that needs to get replaced, they can go get that for $4 from Home Depot and just replace it themselves. Whereas for us, if we have to hire a contractor to go do that, that's going to cost us several $100s. I mean, they can maintain their homes for much less than as an owner of the home. And then they get way, way, way lower lot rent, right? So that's kind of the trade-off if you're a resident is you've got to maintain the home, but you have really cheap rent. So that's kind of the trade-off to it. But it's great because once they're there and they own the home, we own the land, they're an owner and we're an owner. So now we both have a vested interest in making the community nice. So usually when we come in and start cleaning things up and showing that, hey, we care, we'll do, community cleanup days where we get a big dumpster and everybody can throw away stuff and we'll cater it and get lunch for everybody. And, it's pretty cool. You can see the people in the community really get behind it and really, care because it's their community. They live there. They're owners too. We're both owners. So
that's awesome. That's a great way, a great mentality that you don't always hear, or the industry as a real estate investment doesn't always have that heart attached to it. It's always slumlords trying to pinch pennies and make the least amount of improvements. So that's good to hear a fresh perspective where actually your heart and intentions are in the right place from beginning to end. So that's awesome. I wanted to get into the passive income side of it because I just want to ask you, obviously you got into it to create more passive income, generational wealth and stuff. How has the passive income changed your life? And even with that, like what advice would you give to someone starting to build their passive income portfolio? And then caveat to that, how has your perspective on freedom changed from the definition of freedom from the beginning when you set out for freedom versus how it actually worked out in practical application, if that makes sense?
Yeah, great questions. For us, when we started out, like I was like, hey, I don't like the fact that I don't have control over my time. I don't have control over my career. Even though I had a great career, I actually enjoyed what I did and the people I worked with were great, but it was just a lack of control that was the problem. And the fact that I just couldn't spend more time with my family. So it was pretty cool. When I first started, we bought our first property. It was super scary. I was like, oh my gosh, what if everybody just decides not to pay rent? It's like we're going to lose everything. I had all these crazy things. But, the first month, like the rent came in, we paid the bills. There was money left over, cash flow, sweet. And within, I think it was 2 years, my wife was we had our second kid. My wife, which we would not have been able to do before this. But my wife was able to step away from her job just a couple of years in. So it was like already that like de-stressed our whole, because before it was like, she's working, I'm working, we have the kids, like, oh my gosh, what are we going to do for dinner? I'll pull through this. It was just so high stress. So just like, it didn't actually take that long before it had a really positive impact. And then the cool thing for me was I got to like, I ended up like, I really liked this stuff. I'd nerd out on it. So I got to the point where I was financially independent from it. And then it was like, I in 2021, I partnered with my brother-in-law and said like, hey, I had all my money was tied up in mobile home parks now. And I was kind of done growing, but I really wanted to keep growing it because I like this stuff. And it was like, hey, what if we raise some capital and like actually like help? Because I had some friends and family coming and saying like, hey, this is cool what you're doing. Take my money and do it too. So it was like, what if we can help other people along that same journey? So we formed our actual business that is now like raising capital to buy these in 2021. So for me, it's just given me the ability to like, it's so fun right now. Like we have a business, I have employees who are awesome. Like we have an awesome team. Like I really put a lot of emphasis into culture and like, I love it. Well, I really like, there's a guy, Coach Carson, he's a real estate investor guy. He's got a podcast too, but he's got his little mantras like, do what matters. And so it's basically given me the freedom to do what matters to me. I get to spend time with my family. I get to, see my kids every day, every night. I get to grow this really cool business that I love working with my awesome team on. So yeah, it's great.
You definitely gave the answer that I don't think a lot of people expect when they hear the word freedom, especially when it comes to passive income, because most people think of freedom in investing as I'm going to sit back on the beach and let everything take care of itself. But that's not the freedom that you found. The freedom that you found was more control over your time, doing something else that you love while impacting communities and also your team and the company culture. So that's a totally different form of freedom that isn't verbalized that way all the time. So that's refreshing and all great.
I think it's like, if you're the kind of person who's going to take the initiative to get there, it might be hard to sit on the, not that I wouldn't mind a week on the beach, but after about a week, I think I'd be going crazy.
Yeah. Cause that goes from freedom to no purpose. You just all of a sudden have no purpose and you're not making an impact. And I think most people started, their hearts are in the right place, but they're the goal, their destination isn't exactly what they expect, because they expect, it changes. Basically, it changes. I did want to ask you about your vision for the future. What does the future look like for the Freedom Investment Group? And explain how the conversations go when you approach a new investor or a new investor approaches you as well.
Yeah, absolutely. So for us, I want to, within the next 3 years, I'd love to have 1,000 families housed in our community. So that's where we want to grow to. We're at about 300 right now. So we're not massive. And yeah, so I want to be at 1,000 in 3 years and grow our team along the way to make that happen. And when I'm talking to investors, I'm usually, I try to steer the conversation towards what their goals are and their needs are and where are they at right now. Because, when we take passive investors into our investments, passive investing can be great for the right people, but you do need to be a little bit, we need to make sure it's not the right fit for everybody. So I'm usually trying to gear like, what are their investments and is this even the right fit for this person, right? Because the cool thing about passive investments are that real estate pays you in 4 different ways, right? You get your cash flow, you get your loan pay down, you get your tax benefits, and you get your appreciation. And so you get all 4 of those still with the passive approach, like invest passive, meaning investing into a syndication, but without most of the work. But the one big drawback is that real estate's already not a very liquid investment. And if you're investing passively, it's like the least liquid kind of investment you can do. So you definitely, I'm always kind of asking people like, do you have additional savings? Like, are you, this isn't like, I had a good, for example, I had a really good friend who got excited and he had saved up his 50 grand and was like, all right, I want to invest in your thing. But then in the next sentence, he's telling me how he also might want to buy a house and and it's like, no, save your money, get your down payment for your house, or at least figure out that you don't need it. Like it's a great way to build wealth, but you need to make sure that it's not money that you're going to need like next year for something else. Right. So that's usually kind of trying to figure out that, making sure that we have the right thing. But for those people that it does make sense, it's pretty awesome because you can get cash flow and that equity growth is amazing in the value add investments. I'm sure I think you're in value add multifamily, right? So I'm
Yes.
sure that I love that. The whole concept of value add, where it's not like you buy a house in a neighborhood and you're like, I hope that the value goes up, right? Like you can actually control it. So for me, like a left brain person, and it's not even like you control it by like remodeling, because like I'd probably pick the wrong color granite countertop and screw up. It's left brain. So it's in an even economy, the value of your property is proportional to the income that it brings in. So if you can increase the income, you increase the value. So there's this huge lever. So like every empty pad that we fill, that's like another $60,000, $60,000 of equity for everybody that just raises the value of the property up. So the one that we bought in Lexington had 24 empty pads. When we fill those up, that's 24 times $60,000. That's a lot of value that we're creating. So once I realized the math behind that, it was like the whole value add, whether it's apartments or mobile home parks, a lot of the real estate asset classes have it. But that whole value add concept is really, really powerful. I really like it.
That answer was perfect, because as I was listening to you talk, I was going to ask a follow-up question about like more direct, like how do you sell that to an investor? Because as someone who's capital raising for multifamily, I know we pay out quarterly, and then when we do the cash out refi or sell, they get their equity back as well. And I was going to ask you, how do you build in that equity or sell that equity? But you explain that with the pads and every time you add it. Is there anything additional you would like to add as far as how you sell that investment, passive investment, as opposed to like a multifamily? But again, I did say, you did mention it when you said you add the 60, another 60,000, because I don't think that way. And I didn't have that insight into that asset class. So that was definitely eye-opening for me. Was there anything else you'd like to add in terms of how you sell that or pitch that to investors?
Yeah, it's effectively anytime you can, in a commercial asset, right? Anytime you can raise that income, everybody's shares are basically worth more is a way to think about it. So yeah, the fact that there's so many mobile home parks out there, I think there's more value add potential in mobile home parks right now than just about anywhere, because there's so many of them where they haven't raised the rent 20 years because they haven't fixed the roads and they haven't addressed all the deferred maintenance. There's empty pads. So there's just so much like untapped. And these are parks that are in great locations too. I mean, just drive around and look at some mobile home parks around you. There's probably some that are nice and some that are really run down. It's like, why does everybody there have to live in a rundown park? There's so much potential value add right now in these things. I don't think it's going to last. They are kind of getting gobbled up. Like the range we're playing in is kind of that 30 to 80 pad range. I would love to find some bigger parks, but once you get over that 100 pad mark, there's definitely like a lot of bigger players it's definitely in the consolidation process. But I think there's an opportunity right now in the mobile home park space to come and fix up a bunch of these and find like the ugly house in the nice neighborhood
Right.
kind of scenario. And so, yeah, that's why I just want to do that.
No, that's perfect.
So,
That's actually perfect. And it sounds like again, having no insight into this asset class, you're looking at it from the exact same way that I look at the multifamily, because I don't want to go above like 120, 125, because now you're dealing with institutional players that'll just add it to their portfolio and dollar cost average and not worry about an immediate turnaround. Whereas we go for something smaller, you're going direct to mom and pops like that. And it sounds like even from an RV standpoint that you're actually it's probably an easier conversation for you as opposed to me going through many layers of LLCs to try and get to the actual owners instead of, to try and go direct to owner. So it sounds like a really home run. It sounds like a home run investment opportunity across the board. We're kind of at time, and I definitely want to be respectful of your time. You answered every question is more thoroughly than I was even anticipating, and, looking over your bio and everything on LinkedIn. But I just want to ask you, how can people best connect with you in terms of following you, working with you, or having a conversation?
absolutely. Yes. I'd say two ways. So one, I'm very active on LinkedIn. So if people want to connect with me on LinkedIn, I'll respond to messages and love talking to people. I'm a mobile home park nerd, so I'm happy to answer any questions or have any conversations on it. And then also we have a free PDF on passive mobile home park investing that just kind of talks about how to do it and talks about some of the benefits of mobile home parks. And it's at passivemhp.com.
Awesome. I appreciate it very much. Very insightful. I love hearing different views and contrasting points about why people get into what they get into. And you obviously know what you're talking about. Your heart is in the right place. So I think that came across in your energy and the way you talked about everything. So I really appreciate your time today, Cory.
Yeah. Thanks, Eric. This has been a ton of fun.
All right. And everyone, I appreciate you guys for joining us. And remember, with a game plan and consistent action, you too can expect success. Thank you guys so much.